Good morning, everybody. I'm John Huntsman, chair of the Atlantic Council, and we are indeed delighted and grateful to have you all with us. Thank you for being here today to discuss a topic that, as the former U.S. ambassador to China, is very near and dear to my heart, and that is China and its evolving global role. And we're delighted to be able to unveil the Adrienne Arsht Latin America Center's latest report titled A Globalized Renminbi, Will It Reshape Latin America? Peter Schechter is here. We're grateful for his leadership, among many others on his team. Thanks enormously to our generous partners at HSBC, represented here today by their Chairman of Global Banking for the Americas and Atlantic Council board member, Jerry Matto. Jerry has become a great friend over the years, and I'm absolutely delighted that our interests lined up to allow for this kind of special partnership, Jerry. We thank you. But it's a partnership that goes far beyond today's discussion and a similar event in Mexico City next month. Over the next 2 years, with HSBC's generous support, we will look at a number of issues critical to the China-Latin America relationship, from investment to trade to energy issues, with report launches and events in Washington, New York, in China, and various Latin American countries. So stay tuned for more programming on this hugely important set of issues. Now, I'd also like to say a very warm welcome to the Executive Vice Chair of the Atlantic Council Board, Adrienne Arsht, who is with us in the audience today. Adrienne, thank you. Adrienne is in large part responsible for the vision of this organization and the work across a range of issues which have been so successful in recent years. She really is a remarkable driving force, and Adrienne, we thank you for so many good deeds that you do for this organization. Today's discussion is on a topic which requires global attention beyond just the financial world. So I'm delighted to be joined by a distinguished panel of experts to discuss the profound impact of renminbi's internationalization and the impact that it will have on emerging markets, particularly in Latin America. Our event comes at a critical moment, as just on Saturday, the Chinese renminbi became the 5th global currency to be accepted as an official reserve asset by the International Monetary Fund. This is a giant step forward for China, a telling moment in the country's emergence as a global economic powerhouse. Now, for countries in Latin America, such as Brazil and Argentina, that already have substantial trade and investment partnerships with China, this development could further improve bilateral cooperation. However, it's vital we also consider the broader ramifications the renminbi's internationalization will have on other Latin American economies, as well as its implications for our own domestic economy. Today's discussion will delve into the meat of these issues, providing further context to the report's findings and to China's highly complex relationship with Latin America. After I invite Jerry to say a few words, we'll have 2 separate panel discussions. The first one moderated by Sam Fleming of the Financial Times, and then by Jason Marzak, director of the Adrienne Arsht Center for Latin America Economic Growth Initiative. Please remember, today's conversation is on the record and is being live streamed online. I encourage all of you to tweet about the event using the hashtag RMB in LATAM. Thank you all for joining us today, and it's with great honor that I now turn the stage over to Jerry Matto. Thank you all so very much.
Good morning, everyone, and welcome. Thank you, Governor Huntsman, for your kind remarks. It's such a pleasure to be working with you and the Atlantic Council on this important endeavor. Governor Huntsman, your remarks really encapsulate why now is such an important moment to host this event, just a couple of days after the renminbi has entered the international reserves. This is also auspicious timing for us to publicly launch our 2-year partnership with the Atlantic Council. an institution known for its vision, an institution with whom we share many core values. Without being redundant, during this two-year partnership, we will dive deeper into issues of trade, investment, energy, and security in the China-Latin American relationship, with events around the world. We had a very successful private roundtable in New York a few months ago on this topic, which also featured an impressive group of people. I would like to thank those participants as well for helping inform today's report. Finally, thank you to Douglas and Andre, as well as the team at the Atlantic Council for producing another high-quality publication. So, why focus on the China-Latin American relationship, and why now? After nearly 2,500% increase in two-way trade since 2000, the terms of the China-Latin American relationship are on the cusp of change. Renminbi internalization will make trade and investment between the two regions a more seamless transaction. At the same time, a globalized renminbi will mean transaction cost savings for hundreds of companies in Latin America and other emerging markets. But there are some risks involved, as our own market research has shown, and the infrastructure for more renminbi-denominated transactions is still being built. What is the next phase of the China-Latin American relationship, and what are the implications for the Western Hemisphere? Will the renminbi reshape the region? Today, HSBC and the Atlantic Council are looking forward to a discussion that will highlight the nuances in this issue. This discussion is not about winners and losers, but there are opportunities to be seized and hurdles to be overcome. And we have an excellent lineup of experts ready to explain where China, Latin America, and the US will find those. With that, I will turn it over to our first panel. Thank you very much.
Well, good morning, everyone. My name is Sam Fleming. I'm the US Economics Editor of the Financial Times, and it's a great pleasure to be here with a superb panel. As Governor Huntsman said, it was a giant leap forward for China. Its inclusion in the SDR on Saturday, it's a historic moment in terms of currency and also economic development for China and the world, and so the ramifications are huge, and that's what we're here to discuss this morning. Let me introduce an excellent panel to talk about these issues. On my immediate left is Douglas Arner, who's from the Faculty of Law of Hong Kong University and a co-author of this morning's report on the implications for Latin America. On his left is Haywai Tang, who's an assistant professor of international economics at Johns Hopkins and also a visiting fellow at the Dallas Fed. And on the far left is Clyde Wardle from HSBC, who's an emerging markets strategist, foreign exchange strategist. Douglas, can I start with you? Let me talk a bit about the report. Obviously, huge ramifications from this internationalization. One of the arguments you make is that the ramifications go well beyond just the world of treasury and central banking. Perhaps you could spend a couple minutes just outlining why this is such an important theme for the US, for the global economy, the US economy and Chinese economy.
Thanks, Sam, for that, and also thanks to the Council for being here, and to my co-author, Andre, who's in the front row there. I think one of the key points of both the report as well as the answer to your question is that China has reemerged as one of the world's major economies. And with that has come a major position in trade, in finance, and investment. And one aspect of that traditionally has been increasing use of the currency. And so as we look at China's increasing economic role in the world, it's also important to think about the increasing role of the currency, and in particular as the relationship between the major currencies like the dollar, the euro, and as the RMB emerges, the sort of challenges for global markets of the relationships between those currencies.
Let me ask about the amount of use that the RMB is now getting in international transactions. It's fairly small still, in fact, very small. What are the key barriers to an increase in the use of the RMB?
I think there are two sides of that. The first is that very much we're seeing, initially we saw very rapid growth, and certainly if we look at Asian currency usage, the RMB in the context of Asian transactions has become really very substantial. Internationally, it seems to float in terms of trade payments somewhere between just below or sometimes just above the level of the yen to just below the level of the Canadian dollar. So still small, particularly when you compare that use to the size of China's trade flows. I think over the past year and a half, there's been a lot of attention on the internationalization process, but we've also had a lot of volatility in Chinese domestic markets, in particular in the stock market, and just over a year ago in the context of the currency markets. And I think the context of some of those domestic volatilities has slowed progress down in the context of international usage.
Hayward, can I ask you about the moment that we are in history, in a sense? Why is China pursuing this internationalization process now? Why is it a propitious moment for China to be attempting to internationalize?
So I think this is not the first time that China wanted to sort of play a more major role in the global economy. So China joined the WTO in 2001. That was basically sort of the watershed for China to be more engaged in trade and also international financial flows. In fact, in the previous regime under Hu and Wen, in 2006, they had a big meeting inviting a lot of foreign leaders, particularly those from emerging markets, to launch this thing called the Go Global policies. And as a result, you see substantial increase in investment in Africa and other emerging markets. So this is a very different kind of globalization this time, right? So in terms of trade, in terms of investment abroad, China has been sort of pushing very hard. Part of the reason is because the opportunities for investment in the domestic economy have been largely gone, right? So how many high-speed railways you can build, how many freeways you can build connecting second-tier cities. But more importantly, something that I've been doing research on regarding Chinese economic growth is that a lot of times the Chinese government wanted to use some external pressure to facilitate and speed up internal reforms. So WTO is a good example. In fact, the prime minister at that time said WTO is not so much about trade liberalization, it's more about privatization, because it is so difficult to privatize some of these state-owned enterprises. So therefore, WTO provides some sort of external pressure and regimes for them to basically privatize a lot of these firms. So this time I see similarities. I mean, on the one hand, China wanted to be, more powerful in terms of, inducing other countries to use their currency. But on the other hand, they also need some external pressure to basically reform their financial and banking sectors.
Interesting. We obviously saw, particularly earlier this year, an awful lot of volatility in financial markets in China, and also really confusion, I think, in a lot of other global capitals about what China's foreign exchange strategy was. How did the Chinese government reduce that confusion and uncertainty, and how successful do you think they've been?
I think, so, I got my training in the US. I am a big believer in sort of decentralized economy, free market. Once in a while, there could be room for the governments to intervene and sort of, reduce volatility in the stock market. But the way that the Chinese government has been doing has been, by and large disappointing, right? So it sort of scared investors from abroad and also scared domestic investors. And as a result, the kind of housing bubble we have seen in other cities in China, in second-tier cities in China these days, is sort of like a consequence of heavy regulation of the financial market, in particular the stock market. So that has been, in my opinion, sort of a backward development in terms of having additional reforms on the financial sector. So hopefully, with the renminbi being included as an SDR currency of the IMF, that would provide some legitimacy and also some external pressure, so that on the one hand, their hands are tied, and they could not just intervene anytime they want. But on the other hand, they would provide more confidence and credibility about their financial system.
Clyde, let me turn to you. First of all, could you pick up on that last point? How successful do you think the calming measures have been in terms of, especially foreign exchange markets more recently, after all the jitters that we saw earlier this year?
Well, I think, obviously, a year to 18 months ago, we were in a rather difficult situation. We had a lot of stresses in the global markets from anticipation of the Fed tightening. That was strengthening the dollar. And so a number of emerging market currencies were weakening at that time. And at the same time, you had some concerns about the trajectory of growth in China. Some were calling for a hard landing. And this led to, and preceding that, of course, China had begun to liberalize some elements of the capital account to allow for investment from China to move overseas. Of course, with the offshore renminbi, the CNH, and now in other centers as well as Hong Kong, there's an ability for foreign investors to speculate on the renminbi. It trades as a freely convertible currency offshore. And these factors were contributing to pressure, downward pressure on the currency. And what we've seen before, especially in the global financial crisis, when obviously we'd had less liberalization at that time, but we saw from the authorities in China that they tend to have a batten down the hatches approach to situations such as this. And I think what's important is to just focus on the long-term trajectory here of the reform and internationalization process. We believe that will definitely continue. We think that what we saw 18 months ago was more a blip in terms of, okay, let's calm things down, try to remove the dislocation that we saw between the onshore currency and the offshore currency. And I think after the SDR inclusion, we're actually going to see an acceleration of reforms that make those two markets trade much more in line with each other.
Let me ask about the implications for corporates specifically in this internationalization process. I mean, Douglas's report refers to the idea that transaction costs could be reduced. What kind of benefits are you currently seeing for your clients in terms of this process?
Yeah, that's a great question, because we've seen over the last few years the ability for corporates, obviously, to transact in renminbi, where before they would tend to make all payments and receivables in dollars. But there are significant constraints with that process. You don't have control of the currency conversion. You're essentially leaving it to the supplier or the payer to manage those foreign exchange risks. And of course, often prices can be inflated to take into account of those foreign exchange risks. So corporates now are really finding out, if they're, for instance, sourcing manufactured goods from China, they're asking for invoicing in RMB. They're setting up RMB accounts in the offshore market, which are very easily funded. And then making payments that have no documentation or regulatory requirements attached to them. And they're finding up to 4% savings on what they were paying previously. So it's an important process that corporates need to look at, and they need to understand if you're going to do business with Chinese companies, then you really need to look hard at using the renminbi as a trade currency.
Douglas, what did your research throw up in terms of the potential benefits, but also the barriers at the moment?
And I think Clyde's highlighted a couple of them, but I think from the benefit standpoint, one is that as we see ever-increasing trade and investment flows, using the domestic currency provides an alternative in accessing the domestic Chinese market. one of the themes we picked up on the report is that much of the trade and investment into Latin America so far from China has largely focused on commodities and resources. And this is something in the context of thinking about the region going forward. We think that there's a need for rebalancing that direction, and that use of the RMB to target the very large and rapidly growing Chinese market is one of the important options.
Okay. Wai, can you talk a little bit about the same point, i.e. targeting the Chinese market? What are the main barriers at the moment for that targeting process?
I think the main barriers, for more investors and banks around the world to use the renminbi is, still a substantial capital control for both inflows and outflows between Chinese investors and foreign investors. Even though the transaction cost could be substantially reduced as a result of renminbi being included in SDR and the affiliated reforms, the amount of money that can be channeled out and in are still heavily regulated. 5 years ago, I think the Chinese government was probably worried about capital inflows driving up the stock market and the housing market, but these days they're more worried about capital outflows. So the kind of investors that can still invest in China are the so-called qualified institutional investors. There are about 300 of them. And at the same time, the domestic investors who can invest abroad are the so-called quality domestic investors. So without substantial removal of the capital control, I don't think at this moment we can say much about how much the renminbi could be major global currencies yet. Although the Chinese government was very committed. In fact, 2 years ago, the premier said by 2020, the Chinese government is going to have full convertibility for the renminbi. Now is almost the end of 2016, so there are 4 more years to go. Of course, we are talking about China, right? Magic could happen, but it's hard to imagine in 4 years that we will see the renminbi could be fully convertible, mostly because of the capital control, and partly because I think the financial market and the associated legal environment still need a lot of reforms for that to happen.
Clyde, I'll go back to you in a second, Douglas. Clyde, what are your observations on it?
Yeah, no, I think over the last few years, one thing that we've noticed, and if I may pat ourselves on the back a little bit, is that we've tended to, in our research, have been talking about that the pace of reforms is going to be faster than most expect. I mean, certainly in the period of sort of 2010 to 2013. And that was definitely true. So I think there is scope for an acceleration of reforms going forward. I think we've been through a rocky patch vis-a-vis the potential for the Chinese economy and what's happening in global markets. There are still risks out there. I mean, we've seen with the Brexit vote, we've got the US election coming up. There are uncertainties, and I think that the authorities in China are going to remain very cognizant of that. But assuming that, particularly on the domestic front, China's economy remains steady and stable, and we don't see any capital outflow pressures, then I think what you could see is an acceleration of the reform process. Whether it'll have full convertibility of the capital account by 2020 remains to be seen, but I wouldn't doubt it too hard. I think we're beginning to see major central banks around the world, and including in Latin America, buying renminbi for their reserve assets. Of course, the numbers relative to their total reserves are very small, but that's definitely the trend we're seeing, and I think we'll see that continue. Douglas?
Yeah, actually just a couple of follow-ons on both of those. It's a sort of ongoing joke that for the past 20 years, we've been 5 years away from capital account convertibility in China. And I think over the past couple of years, we thought that maybe that 5 years might actually happen this time, but it still seems like it's 5 years away and could continue to be 5 years away for some years to come. One question on your point on use of central bank reserves. Since the opening of the interbank bond market, are you seeing more basically direct access?
Yeah, we're seeing significant inflows over the last 6 months, more than, prior to March of this year, the inflows were actually pretty negligible. And we were obviously seeing outflows in the sort of 6 to 12 months prior to March. But yeah, over the last 6 months, we've seen a significant pickup in inflows from both institutional investors and also from central banks as well.
And this takes us back to the trade point, because one of the reasons why central banks are going to be increasing their reserves is that given the trade flows, and if we see, as we are seeing, an increasing denomination of those trade flows in RMB, there's a necessity for central banks to manage those. And as a result, central banks around the world have a need to access assets, particularly in the domestic bond markets, to manage their own reserves, to manage flows as a result of trade and investment.
Hey, do you agree with that, that assumption?
Yeah, so I think in the long run, there will be increasing amount of sort of reserve-related investment going into China. But there got to be prerequisites in the sense that, convertibility is one of them. Of course, we don't expect full convertibility in 4 or 5 years, but increasing level of convertibility would give foreign investors some confidence that, they can, in bad situations, sort of convert renminbi back to their own currencies. In terms of trade flows and how much of it is going to be invoiced in renminbi, I remain very optimistic that more of that is going to be invoiced in renminbi. Because I do some research on China-Africa relations, and I realize one trick. Well, I shouldn't use the word trick, but one strategy that the Chinese government has been using is basically investing a lot in natural resources in Africa in renminbi. In return, those African nations will have to buy Chinese goods in renminbi.
Exactly.
So that way is a very effective way of sort of putting renminbi to be a global currency. So on the trade side, I'm very optimistic. On the financial side, the reason why I'm a little bit more reserved is because I think there's still quite a bit of legal reforms and financial market reforms that need to be done before that can happen. Morgan Stanley, I think, had a very optimistic estimates that in the long run, I think they have 10-year in mind, that there will be $1 trillion US dollars worth of renminbi flowing into China as a result of currency reserve purposes.
Let me take a step back now and look at the bigger picture, and in particular the announcement or the landmark reached over the weekend with the SDR. Douglas, what are the practical implications for this inclusion in the SDR? How important is it? Mainly a symbolic thing, or is it do you think it's a major thing for the future for the development of the Chinese currency?
I mean, I actually go back to Clyde's and Haywai's earlier points that I think when we look at the SDR inclusion, there are really 2 principal reasons why it's important. The first has to do with the process of domestic financial restructuring. In other words, much of the strategy of the Chinese leadership saw SDR inclusion much in the same way as WTO joining. In other words, this was a way to lock in the reform process. And I think internationally as well, once that became understood, that SDR inclusion was one way to lock in this continued process of domestic financial reform, that has tremendous importance. The other aspect is largely political, that it's something that is symbolic and important from the standpoint of, as trade flows increase, the redenomination of central bank assets. The SDR inclusion makes it simpler. From the standpoint of, will this cause a dramatic increase in transactions? I think the answer is no. It's a much sort of longer term restructuring and political recognition process.
And keeping view from 30,000 feet, can we talk a little bit about the implications for the US then, as the prime currency or the holder of the prime currency in the world? Over what period could you start to see that being challenged, Clyde, by China? Are we talking many, many decades? Is this a threat or is this an opportunity for the US?
I certainly don't think it's a threat. I mean, just in terms of currency flows, the BIS does a triennial every 3 years. They do a survey of the foreign exchange market, and the U.S. dollar is still by far the dominant currency that over 90% of foreign exchange transactions are with the dollar as one side of those currency transactions. So that's not going to change. The renminbi is a very small portion of that. But what is interesting in that survey, and we've seen over as long as I've been in the market and watching this survey, you've seen FX volumes going up every 3 years. And this is the first year that the total FX volumes actually fell versus 2013. What's interesting, though, is that the renminbi FX volumes are now up to the 8th largest of all currencies. Still a relatively small number compared to the total dollar transactions. But interestingly, that in a 3-year span when total FX volumes have fallen, renminbi volumes have actually risen. So I think that's reflective of what's happening and will continue to happen. Commodities are priced in dollars. I don't think that's going to change anytime soon. So I think Latin American commodity exporters may struggle to try to shift, or the Chinese certainly will struggle, I think, to try to shift that pricing into renminbi. So I don't think that's going to change. But I do think it's significant for Latin American exporters to look very seriously at being paid in RMB as opposed to dollars for those exports to China. In particular because Chinese current companies now are actually running into some roadblocks and hurdles themselves domestically to pay for their imports in US dollars. It's becoming increasingly easier for them to do that in RMB. And so I think they will be quite open to Latin American exporters to China approaching them and being paid in RMB. It'll be more convenient for both parties and potentially see cost savings for the Latin American companies exporting to China.
Hey, what are your thoughts on the same topic? What are the implications for the dollar and the US more generally?
So I think the way that I would analyze this is to separate denomination in currencies into those for trade flows and those for financial flows. So in terms of the denomination in renminbi for trade, as I said, I think there will be an increasing use of renminbi, particularly within Asia. Trade is such a complicated subject these days because of the development of global value chains and increasing regionalization. So there could be sort of network and multiplying effect, which will push the renminbi to be more useful in international trade. In terms of the denomination for financial transactions, I think renminbi is still sort of far away from the US dollar as being the major safety investment asset. As I said, because of incomplete convertibility and also the associated relatively inefficient financial system. But let's see, give China 10, 20 years, the gap will be reduced. But for now, I wouldn't be worried about the US dollar being displaced by any major currencies in the world as the major safety asset and as the major reserve currency.
Douglas, but I'm going to ask you to just turn to that question, and then we'll open it up to questions. So if you have any questions, do raise your hand up. But Douglas, first of all, what are your thoughts?
I think I would nuance that a little bit. And I think what we're very likely to see is in the near future that the RMB will emerge around the third slot, that in the context of Chinese economic size and relationship, you can expect that it will probably eclipse the yen in the near future. I don't really see...
Near future meaning?
Next year.
Right.
It almost did it this year. So this is something that is near term.
Yep.
So I think what we're looking at is 3 major currencies going forward. I don't see any likelihood in the medium term of the RMB eclipsing the dollar, but something in parallel to the euro makes a great deal of sense. Finally, from the standpoint of the financial side as opposed to the trade side, we have now seen China emerge as a net foreign creditor, as one of the world's major foreign investors. And there's an increasing push for that investment and credit to be provided in RMB in international markets. And as a result, if we look at historical processes of other creditor nations emerging throughout history, we will see an increase in use of the currency for financial transactions as a corollary of that.
Right. Questions from the audience, please raise your hand and do say where you're from when you ask your question. Gentleman here, please. And please wait for the microphone.
My name is Walter Jurasek. Yes, I have been in China. I observe life in China. I will ask you a simple question, actually, because there is a trade imbalance between all of the countries, between China and the rest of the world. Now, eventually, Chinese people will demand better standard of living, and the trade imbalance might collapse because Chinese will demand better life, better standard of living, etc., etc. So the protectionism from other countries, they will say no more Chinese product will be entering to our countries. The currency eventually will go down with the same situation because it's no way they can sustain. Because if other countries close the markets and the imbalance is so great, what will be the future of Chinese currency if this happened?
Hey, Wai, can I ask you to take that one?
So if I understand you correctly, so you are concerned about the fact that foreign consumers may not want as much Chinese goods to be exported to those countries, so therefore the demand for the renminbi will be reduced. Is that the conjecture? So I'm a trade economist, so I believe in comparative advantage. And I still think that China still has a lot to provide in international trade. Labor costs have been increasing quite a lot, but compared to those in Mexico and the US, they are still much lower. What I'm worried more about is basically the increasing protectionism that we see in the US and around the world. So that may push Chinese growth back by 1 or 2 percentage points if I have to put a number on. You are absolutely right that the renminbi has been weakening, right? If you look at the exchange rates, I think the renminbi has been depreciating since November last year. But I don't think that sort of sudden increase in trade protection will lead to a collapse of the renminbi just because there's still a lot of investment and a lot of demand for Chinese goods in the absence of protection.
But why don't you invest inside China if they will demand eventually better standard of living? They say the labor will be costing more. This is going to happen. Eventually it's going to happen anywhere in the world. The people will demand better standard of living. And what's going to happen in China when they say, hey, we cannot live on that? And the Chinese people rise up. What will happen there?
Let me give this one to Douglas, and then we'll move on to the next question.
I was just going to say that actually we're already seeing this as an important trend. Wage levels are increasing. Consumerism in China is increasing dramatically. And in fact, that's probably the Chinese government's biggest objective right now is restructuring the economy to push it up the value scale, up the innovation scale. And very much RMB internationalization is in fact part of that process to drive the development of the Chinese economy. So in fact, what you're saying is already happening very dramatically. I see it where I live in southern China, that wage levels have increased dramatically, and the sorts of low-cost manufacturing that used to dominate in southern China have been pushed out to Vietnam, to Bangladesh, to Western. Increasingly, what you see is higher value-added electronics and, in fact, quite innovative developments. Huawei, Xiaomi, and the like taking over where used to be shoe and textile factories.
Okay, another question, please. Lady here first. Could please wait for the microphone. Towards the front. A little bit further. Oh, sorry. Thanks very much.
Hi, I'm Usma. I was from University of Hong Kong. My question is partly related to the previous question on the domestic Chinese reforms, and as Highway and Doug also mentioned about that this RMB internationalization is more, would have deeper implications with the domestic, locking in of the domestic Chinese reforms. I wonder how much these domestic market reforms are going to cost Chinese in terms of, for example, unemployment or we were talking about the rising wages or increased cost of living and other things. So would these reforms, the market reforms, would be worth the cost in terms of unemployment, social unrest, or other
Okay.
things?
Do you want to take that one, Doug?
Yeah,
And what is the cost?
I mean, I think the quick answer is that the sort of view in China at the moment is that the risk of not doing anything, of staying with the old export-oriented, low-wage, manufacturing-driven model is at the extent of its possibilities. And that as the labor force is already shrinking, that in fact that previous model is no longer sustainable. So the only option to avoid much more severe problems is in fact a process of restructuring the economy to avoid the middle income trap. And financial reforms are a very important process of making that happen. So it's very much a balancing act between the costs and challenges of the restructuring versus the costs and challenges of the fact that the old economic model is no longer sustainable. So trying to balance the two.
Clyde, how bumpy is this proving to be?
I think remarkably smooth so far. I mean, I think the government switched to focusing on domestic consumption a few years ago, and part of that reform process was trying to disencourage savings from domestic the Chinese population. Typically, the Chinese are very good savers. They save primarily for retirement and their children's education. And health benefits, and so what the government has been doing is they've been building new public schools and hospitals to try to encourage savings and more consumption, and in general that has become a relatively successful policy to date. So I think this trend will continue. I think the economy is evolving and it's certainly moving away from the export-led economy, and I think as long as you don't see significant pressures in certain parts of the economy, especially the property sector, then I think that we can be relatively sanguine about the outlook.
One more question towards the back, please. Oh, sorry. Right there. Thanks.
Should I?
Hi, thanks. Just a quick question. Sean Miner from the Peterson Institute. Clyde, you mentioned that you think the SDR inclusion will spark reforms that close the gap between the onshore and offshore RMB. Is that because you think it's going to move towards more convertibility, or is there another reason?
Well, the difference between the onshore market and the offshore market, and I'll just say a couple of points to those who are unfamiliar. If you imagine the onshore market is basically domestically in China, and we talk about the offshore market as all of those other centers where you can trade the renminbi on a free basis. It's literally like trading the euro. And they've set up clearinghouses in 16 cities around the world now. The first one was in Hong Kong, and that's still where the most liquidity exists. But you really have to imagine a pool of liquidity of renminbi in the offshore market, and obviously a much bigger pool of liquidity in the onshore market. And so what we've had at certain periods of stress is the liquidity in the offshore market become smaller, and that leads to pressures on the currency and the money market. And we see money market rates going up. We see the currency weakening relative to the onshore market. And certainly this has been a concern. And it's since 2010, when we really began to see the advent of the offshore market, there have been a couple of periods where you've seen a dislocation in terms of the rates between the onshore and the offshore market. In some cases, the offshore market, the renminbi, was trading more strongly, especially in the early months of this market, where there was extreme demand for renminbi assets. But more recently, over the last 12, 18 months, you've seen it go the other way with some stresses the other way. So I think the reforms are really going to focus on moving liquidity between those two centers and the ability for banks that have presences in both markets to pool that liquidity. And I think that will encourage the process of unifying the two rates on a longer term basis. Obviously, if we get to a period where there's full capital account convertibility, then there'll be no issue, and any differences between those markets will disappear.
Well, it's as I said at the start, it's a huge historic moment, a historic week in terms of currency policies and economic policies around the world. A lot of this is going to be debated over the next few days because the IMF and World Bank are having their annual meetings, and this is very germane to those discussions. As I think you will have found from this excellent panel, it's an extremely complex process and has a very, very long way to go, the internationalization story. So for the time being, please join me in thanking the panel. Got the next panel coming up, and
great. Well, thank you very much. Good morning. I'm Jason Marzek. I'm the director of the Latin America Economic Growth Initiative at the Adrian Arch Latin America discussion. And Sam, thank you very much for captaining a great discussion. Doug, Haywa, and Clyde for your insight. I think the only problem with this first panel is you did such a good job that now you've really set the bar for our second panel. So now we have a bar to hit. Before we start, I'd like to again congratulate Douglas and Andre here in the first row on an excellent report on a topic that I think, frankly, may be overlooked by some as just a technical development in the world, but really has the potential to reshape how business is done across emerging markets, including Latin America. And that's really no small statement, but frankly, it's true. The renminbi becoming an international reserve asset is not something to be overlooked. As our first panel said, it has a huge potential to bring changes not just in the Chinese market and the pace of reforms, but really there are global implications. So we spent the last half hour looking at the ins and outs of China's currency policy, but we are the Adrian Arch Latin America Center. So the next panel is going to look at what this means for Latin America. And we have a dream team, I would say, a dream team of speakers my dream team of speakers at least, to look at that. And I'm going to sit down here. The first speaker, you have their full bios, their handout when you came in. I'm going to briefly introduce them. To my left here is Barbara Kochler. Barbara is a senior investment policy officer in the trade and global competitiveness global practice at the World Bank. In addition to that, she spent 8 years previously at the Peterson Institute for International Economics, where among other things, Barbara, you published on a number of topics, but also Chinese foreign direct investment in Latin America. So this is a topic that's very familiar to Barbara. Next to Barbara is a person who is no stranger to Washington, somebody who commands respect around this town and globally, and that's Ambassador Luis Miguel Castilla, who I'm proud to say is a senior fellow now for the Adrian Arch Latin America Center. Ambassador Castilla was previously Peru's ambassador to Washington up until just a few months ago, and among his many other responsibilities in his life, he's also served as Peru's Minister of Economy and Finance under the administration of President Humala. So Miguel, now that you're out of government, we can ask you those difficult questions, right? To Miguel's left is Claudia Trevisan, who is the Washington correspondent of O Estado de Sao Paulo, a newspaper that's familiar to many, but for those who it isn't, it's one of Brazil's leading and most influential newspapers. Among Claudia's many foreign assignments, Claudia spent 6 years, right? 6 years living?
6 years in Beijing.
6 years. Claudia spent 6 years living in Beijing, but that's not her only claim to fame when it comes to China. You've written now 2 books on China, among, I don't know how you find the free time being the correspondent submitting daily stories, but a lot of time living in China and writing about China. So I've asked the speakers, I've actually encouraged the speakers to disagree with each other. Because that's what makes a panel fun. So let's see if you all follow through on that. What we're going to do in the next half hour is we're going to look at the general picture, and then we'll look at risks, investment potential, and of course, although this is about China, Latin America, we are here in Washington, so we'll look at the U.S. implications of renminbi internationalization as it pertains to Latin America. So let's get started with you, Barbara. I'm going to throw the first question since you're at my left. You've done a lot of excellent work on Chinese FDI in Latin America. Do you see renminbi internationalization reshaping the investment picture across the region in the short to medium term? Or is this really, I mean, this is a tough question, but is this really, or are the real implications really still so much unknown that it won't be clear for years to come of what the real impact is?
Well, thanks for such a narrow and specific
No problem,
question,
no problem.
Jason.
It's a great
I
way to start off the
appreciate
panel.
that.
Keep it
It is,
general.
and actually, you've given me the out to say, well, we really don't know. But
I'm not going to let you get away with that.
do that. So I probably should stipulate that although on my bio you see that I work at the World Bank, my views do not represent those of the World Bank, any member countries, any of my dear colleagues or their brothers, sisters. I'm probably here more with my Georgetown professor hat.
One of your many claims to fame.
One of my many claims to fame. I think that's it's an interesting question. As you know, obviously, and the report mentions this, and congratulations on an excellent report. China's interactions in Latin America have really been sort of leading up to this. So in terms of renminbi internationalization, you already have 3 countries that have swap arrangements with China, and so there has been some activity in local currencies for the two.
Explain what a swap agreement is quickly.
A swap agreement, and I think the audience probably knows, but means that commercial transactions can be paid in the local currency. So if Brazil exports goods to China, those goods can be paid for in renminbi and vice versa. And that actually brings up an interesting point that Douglas Arner made on the previous panel, which was the hope that this would lead to some rebalancing of the economic relationship between China and Latin America. As has been mentioned many times, there's a massive trade imbalance between China and just about all of China's trading partners in Latin America. That's certainly a big deal. And so Latin America imports lots of Chinese goods, but hasn't been able to break into the Chinese market in terms of exports or in terms of investment. And we'll talk about investment in a little bit. If the internationalization of the currency, if the ability to use the renminbi can expand that, that would be great. And if Latin American companies can gain greater access to the Chinese market, then this would help Latin America break into a dynamic market. Now that said, China has been undertaking some reforms of its foreign direct investment regime, but there are still tremendous regulatory, administrative, and legal barriers in addition to reserved sectors. So, I do hope that this is a signal that China is undertaking further economic reforms and that those can be of benefit to Latin American companies.
Well, Barbara, as we talked about in the first panel, this has been something really that Latin American companies, all of this in this room, have really struggled with. Is how do you break into the potential of the Chinese market? And Ambassador Castillo, or Miguel, as you prefer to be called. RMB use, international transactions, it provides a lot of opportunities, new opportunities for Latin American countries, from investment in China to attracting new investment from Chinese companies all this coming against the backdrop of a boom in Chinese investment in the region. So I want to take you back to your days as finance minister. Don't want to bring up any bad memories, but I'm going to take you back to these days. What steps should finance ministries take to best seize on the opportunities this could bring? But also there are some risks, as we talked about in the first panel. So how do you also, from a finance ministry perspective, also mitigate some of those risks?
Well, thank you, Jason, and let me also congratulate the authors for a very insightful report. Actually, when we talk about Latin America here, I want to be clear, because here we have to do the distinction. One thing is the reality of cash-starved countries that needed to build their reserves. I won't mention the country, but that you will know that went into a swap agreement. And the other thing is of a very sophisticated country that would like to give options to its investors and having a quota in the qualified institutional investor scheme, namely 2 countries in the Southern Cone. And so there's different, I think, motivations for countries. I think the opportunities, trade-wise, I think commodities will still remain a driving factor for many South American countries, in spite of what's being told. And actually, I think for the non-commodity, which would perhaps fit better in terms of RMB denomination, I think there's still a lot of, in the same line as Barbara mentioned, a lot of restrictions to enter at the Chinese market. One talks about tariffs, but if one looks at, for instance, the subsidies and the VAT that the Chinese charge for the imports that come from, for different agricultural products, they're huge, over 50%. So it is very difficult to access the Chinese market for non-standard commodity products coming from anywhere in the world. Here I'm talking about Latin America. So I would be less bullish in terms of this huge opportunity there is. I see it more as an opportunity in terms of locking in reforms, in terms of trying to liberalize its capital account, deepen its financial market. I see that as the main, objective of this process of SDR inclusion, of this RMB inclusion among the SDRs. But I wouldn't really be, too over optimistic in terms of this is the new, way for trade to be denominated in RMB or finance. In terms of finance, I think there also needs to be adjustment and I'll tell you the case of Peru, for instance. Okay. In my own country, the Chinese were very, very aggressive in terms of opening up. Not only they were able to open up one branch of the Chinese, but our legislation has, constraints towards linked companies. And given that for tax purposes, for banking purposes, if you're linked to, a home office, a home firm, then there are restrictions. And given that China, most of things are owned by the government, that implied that we had to change our banking system, our tax code, to be able to accommodate. And there's also restrictions in that regard. In terms of risks, I think the document does a good job in terms of the main objective of reducing transaction costs, of taking away currency risks. But still, we are a region, I think, primarily that is seeking towards reducing its mismatches in currency. Peru just did, for instance, an operation in the market to be able to increase the local currency denomination of its debt. And I think firms on the corporate side are trying to minimize and try to hedge any potential currency mismatches they may have.
So you're saying that even though there's a reduction in transaction costs because of the renminbi internationalization, unlike I think it was Doug in the first panel that was more bullish on the opening up the Chinese market, you see because of Chinese restrictions that potential for Latin American companies to move into that market is
I see this as a long-run process.
Yeah.
And it's very country-specific. So I wouldn't actually put all Latin American countries in the same bag.
Yeah. Claudia, Miguel mentioned he didn't want to mention any names of any countries, but he mentioned about China being becoming sort of a lender of last resort in the last decade for certain countries in the region. I'll name the countries. One of them is Venezuela, and the other one is Argentina. Now, clarify this, not under the current Argentine government, under the previous Argentine government. And what that helped to do was it helped to prolong unsustainable financial conditions in those countries. So why is it in Latin America's and China's interest to ensure that its loans and investments are being used, and again, for sound technical and economic purposes? I say the word Latin America, but as Miguel mentioned, talking about specific countries.
Well, I think the main obvious reason is to try to guarantee that these resources are used in the most efficient way possible, and they are used in projects that make sense from an economic point of view, and does not perpetuate a development model that is unsustainable. And what I think that is clear in the case of Venezuela. Since 2005, China gave $60 billion in loans to Venezuela. And there is no indication that the oil production in Venezuela is more efficient today than it was 10 years ago. At the contrary, there is a reduction in oil production, and the economic situation in the country is unprecedented. And from the Chinese side, I think there is the evident risk of not being repaid from the loan. And I think one could also agree that there is a risk of a political backlash in the situation where you have a change in the government after being associated so strongly with the previous government. But I think if we look at the example of Argentina, I think this expectation might be wrong. Mauricio Macri assumed office last year, and initially there was suspicion in the new government towards China that China was increased a lot its influence in Argentina under the Kirchner government, but the suspicion quickly vanished. Mauricio Macri has already had 2 meetings with President Xi Jinping this year, and China has announced in the first semester of this year investments of $25 billion in Argentina. So I think there is a gravitational pull on the Chinese capacity to export capital that overcomes any potential political backlash.
And of course, from China's perspective, the Chinese want to invest in sound policies in which the investment is going to be able to pay, which they're going to be able to pay back their investment too, right?
Yeah.
Which is obviously a concern.
I think for sure, and I think from what I hear and talk with people, I think the experience of Venezuela had a learning effect from the Chinese side to be more cautious in their decisions there to lend money and to be more concerned with the economic and returns of these investments in the long run.
That's great. Thanks, Claudia. Miguel, I just want to turn back to you. So let's look at there's obviously some cautionary winds around internationalization of the renminbi, and in this report, which I think should be on everyone's chair, and I highly encourage you to read it. It's a fantastic report, although I'm a little bit biased. But in this report, we know the dual dynamic that increased investment can be a win for countries, but there's also a cautionary note of how an increase in renminbi use could lead to greater fears of overdependence on China, Chinese trade, Chinese investment, Chinese finance. So, Miguel, from your perspective, what steps should be taken? I'd love for the other panelists to jump in on this as well after you, but what steps should be taken to ensure that the the potential increased use of renminbi, that renminbi brings in investment to necessary sectors in Latin America, doesn't result in an overdependence on China, or is that too far-fetched? Do you not see that?
No, I think that's too far-fetched. I think still, our dominant investors are countries that, the European Union, the US, are the dominant investors in the countries. And I don't think you can really extrapolate. I would say that could play more towards the Africa-Chinese relationship than the Latin America, relationship with China. And just to give you an example, beyond commodities, and actually we were just discussing with Claudia before coming here, the first official visit of Peru's new president was to China, and actually to signal, his intention to deepen, the links and to attract investment, not to, ask for loans, which is a different, important point made. But we were talking about this bio-oceanic train that would join, Brazil with Peru towards China. And actually, a huge train that was announced when the Prime Minister of China came to the region a year ago. And this was actually, a lot of pragmatism came by, and that huge project of 60 billion was reduced to a commuter train outside of Lima as a priority. So I think this, over-dependence, theory doesn't really apply. We still do have huge necessities of investment, of FDI, which is receding in many countries. And obviously, we're open to receive a lot of investment, but I don't see any particular fear. And also, I see a change in the nature of investment, even in extractive sectors. Back again to the case of Peru. 20 years ago, we privatized the public, the SOE firm of iron, and it was actually a really bad experience, lack of compliance with environmental labor standards. That was 25 years ago. Nowadays, we have huge Chinese companies coming in, that meet high standards. They actually stock in the Hong Kong and London market, capital market. So very sophisticated, run under high standards. And there's been a change, I think, in also the composition and the type of investors we're seeing from China coming into the region.
Barbara, on that point, do you see now, as Miguel mentions, there's been this change in the composition of investors, more sophisticated investors, more sophisticated projects. But with as talking about the renminbi internationalization, that can open up the Latin American market now to Chinese companies that don't necessarily have access to international credit in dollars to invest. Previously companies were constrained by that. You had to always be able to invest and have that access to dollar credit. So how can Latin American companies best evaluate the investment offers that could come from this new crop of Chinese companies that don't likely have had as much global exposure? Something that we tackled a little bit in the report, but I'd love your perspective on this.
So two things. One, the composition of Chinese investment in Latin America is changing to a certain extent. There's certainly been a Chinese learning curve, and I think Peru is sort of the poster child for that experience, where both sides have really gone through an evolution in terms of a country like Peru, setting out standards for all investors, including the Chinese investors, and China through changes in its policy and also just learning the Peruvian environment. Where for Chinese companies, dealing with civil society was a new experience. And when we did our report, some of our interviews really pointed to the difficulties in learning the culture of the country. China has been invested in Peru for decades. It's gone through very difficult and very positive periods in Peru. And I think that that has contributed somewhat to the increased sophistication and increased also sophistication of investments in Peru and some of that change. And you see that happening in other countries in Peru as well. That said, China still invests predominantly in natural resources and in infrastructure. And so China is a natural resource seeking and a market seeking investor. If the internationalization of the renminbi can somehow move China more into an efficiency-seeking investor and help Latin American companies become part of global value chains, that would be a tremendous help to those countries. And I suspect that another part of your research program, the Pacific Alliance countries, are thinking about how to align their policy in order to be able to do that. The second part, should Latin American countries worry about these Chinese companies that are coming in without standards, without having to hold up to sort of the New York Stock Exchange standards and without US dollars? Well, if a Chinese company comes into a country like Peru, it's going to have to meet the standards of the Peruvian environment. It's going to have to meet labor standards and environmental standards. And here I think there is a burden on Latin American policymakers to think about what risks might be associated with investment from companies with which they may not be as familiar. And so really make some resource allotments so that those standards can be enforced, particularly at the local level where you sometimes don't have great budget for evaluation of this. In terms of the currency issue or the capital issue, I would just say that companies that aren't prepared and aren't well capitalized and don't have proper business plans are probably not going to do well in the market. And so that will probably take care of it.
Claudia, looking at inward Chinese investment into the region, one deal on the table right now is possible Chinese financing of Petrobras, Brazil's state and oil company, with a potential $10 billion loan from Chinese banks. How significant let's look at this deal and the Brazilian context. And Brazil is important, of course, because of the huge increase in investment and trade between Brazil and China in the last few years. But how significant would this deal be for the overall state of Chinese investment in Brazil? And along the lines of our topic today, does renminbi internationalization make more deals like this likely going forward?
Well, Petrobras is the largest Brazilian company. It's one of the companies with the largest corporate debt in the world. It has a debt of $125 billion. Last year, it lost its investment grade, which made it more difficult, more expensive to access the capital markets. And the Chinese have been one of the main sources of finance for Petrobras. And this deal, it has been negotiated since the beginning of this year. There was an expectation that it would be announced during the visit of President Michel Temer to China earlier this month. But the negotiations have not been concluded. But there is an expectation that it will happen sometime soon. So I think it shows the importance of China as a source of finance to Brazil and to Brazilian companies, and show the deepening of the finance links between the countries. And I think one of the possibilities that the RMB internationalization might open to companies like Petrobras, provided that the reforms that are needed to this internationalization are implemented by the Chinese government, is probably the possibility of issue bonds in the Chinese market and have one more access to a source of capital inside the Chinese market.
And now President Temer was just recently in Brazil, actually his first foreign trip, right after he was confirmed was recently in China.
Yes.
His first foreign trip after he was confirmed as president. And he used that as an opportunity to try to attract more Chinese investment into infrastructure projects in Brazil. How successful was that?
Yeah, it was a bit by chance that his first international visit was to China. It was because of the timing of the impeachment process, and the impeachment of former President Reshape was concluded in the early afternoon of August 31st. He was sworn as president. In a couple of hours, he was on a plane to the G20 meeting in China. And there was so big uncertainty of who would represent Brazil in the meeting that the list of dignitaries have the names of all the representatives of all countries. And in the case in Brazil, it was the leader of Brazil, because nobody knew if it would be Temer or Dilma if the impeachment was not approved, or none of them if the vote did not happen in time. And President Temer had a meeting with President Xi Jinping. And besides that, which I think is more important to our discussion here, he took part in a seminar that was organized to Chinese investments to present the opportunities of investments in a huge infrastructure program that the government launched earlier this year. It's projects that in a total amount of around $100 billion. And there were 250 representatives of Chinese companies. And I think there was a great deal of interest, especially in projects related to transport and logistics that could make it more efficient to the export products from the region to China. And I think there is an increase in recent, especially since last year, in Chinese investments in Brazil. I think it is a factor of a convergence of factors. The need of Chinese companies to invest abroad, the devaluation of the Brazilian currency that made it cheaper to invest in Brazil, and also something that we might see the effect more in the future, the huge investigation of a corruption scandal in Brazil that affected many of the large Brazilian companies that used to take part on infrastructure projects.
That's great. I want to have one last round of questioning just quickly on the U.S. implications. We obviously are here in Washington, so we would be remiss if we didn't talk about the U.S. implications. But then we want to spend the last few minutes to open up to questions from the audience. So start thinking about your questions. I know there was one in the first row here from the last panel, so if there still is that question, we can take that first. But U.S. implications. Miguel, you served most recently as a diplomat, as Peru's ambassador to the United States. And I think with this, we've talked about in this panel that the potential implications that renminbi internationalization has for bringing in more investment into Latin America. I think the panel seems to conclude that there's probably less potential that this will bring for Latin America, for countries' investment into China. But as you think about what this could mean for Chinese investment into the region, how does this, how do you see this as having political or economic ramifications in the U.S. relationship with those countries in the region with which there will be even greater commerce and investment with China as a result of this?
Actually, I think more important is the lack of approval of TPP than the RMV discussion, to tell you the truth. And actually, now that APEC is also being chaired by Peru, there is a tension between the U.S. and the Chinese in terms of actually pursuing a free trade agreement where China is part of it. And that's the blueprint that's being discussed in Lima at the end of November, when we have the summit of leaders. And what will happen, if the TPP would be postponed till who knows when? I think that's more of an importance in terms of the impact on Latin America, China plus relationship. I see there real tensions. I see there a concern from the U.S. administration of giving away space for Chinese involvement. Obviously, the RMV will be a vehicle to accelerate the flows and to it's another way to join both regions. But I suspect that actually now the focus will be what happens with trade agreements, and that's actually something that we more concerned as a former ambassador.
As a former ambassador, I think you always still carry the title though. Barbara, do you agree with Miguel? And also along those lines, I mean, maybe this can be an opportunity of not necessarily of U.S.-China competition, but is this present an opportunity for working together on the kind of greater good, which is the economic development of Latin America, and rising up the good of the region as a whole.
Sorry.
No, go ahead.
I can't disagree with Miguel, even though I'm supposed to, but
I'm trying to get somebody to disagree with each other.
So, but I like your scenario, and it sounds really nice, the U.S. and China working together for the greater good of Latin America, but I think but here I'm going to disagree with you, because
Perfect.
I think...
I'm trying to get somebody to disagree.
So we first need to stop talking about building walls against our major trading partners in the region, and I think also just, making statements about trade wars with China is not helpful for the greater good of the Latin American region either, because, I mean, Peterson Institute has done really nice work on what that might mean for the U.S. economy. For the Latin American economy, that would be a disaster to the United States, which is U.S. and China being two major trade and investment partners. So, if we want to constructively engage with China, yes, that would be wonderful, and maybe APEC is one forum through which that is being done to a certain extent, and that could be used as a springboard for that. But I think the United States has an opportunity to show Latin America that it's concerned, that it's committed to the region with a strong Latin America policy that does not include trade and investment barriers.
I want to make sure we leave time for questions, and so we're going to go back to Jerry's question.
No, it's a different question.
Different question. Okay, good. Different panels, a different question.
I just spent 2 weeks in China recently, and one thing that I found out is that the ODI in 2016 is going to be for the first time higher than the FDI. So China is going out to invest. Having said that, the investment in China out of the financial, like the Chinese Development Bank in Brazil, we didn't see too many projects coming in the infrastructure or other real projects that we can touch. I mean, the biggest one was probably Bahamar in Bahamas, which was a failure. $3 billion went down, and I don't see many more investments going to Mexico because it's kind of Coke and Pepsi. So where you see real projects going, this is a question they asked me, so I'm asking you, going into Latin America. Especially there has been an announcement of $250 billion going to Latin America in the next 5 years.
Thanks, Sherry.
Well, infrastructure still,
Yeah.
would be the sector. We still have huge gaps to fill. I don't know whether and each country has its own framework, but we follow public-private partnerships, and Chinese have been quite interested in many of the big projects, bidding for an extra line, the subway in Lima or other countries. But there's also this pragmatic view, huge train, 60 billion, joining Brazil and Peru. Now it is a commuter train in Lima. So there's also some realism into many projects. But I would say infrastructure, energy is still a very, very important sector towards the future.
Barbara, you want to add something?
I think that just shows how difficult infrastructure projects are. I think everybody was expecting that with this new infrastructure bank, things would go much more quickly, and I think now reality is set in and expectations are being ratcheted down, and hopefully pragmatism will prevail. Perhaps the goodwill and availability of funds will stimulate some countries to make things a little bit easier in those aspects, but there's still a pretty good potential. I think Brazil being a big potential market, but this last year hasn't been really easy for Brazil and for big infrastructure projects in Brazil either. So I would say with time, take a medium to longer term view rather than a short term excitement, fireworks view, which I think everybody was hoping for. I think that is an area in which there can be, not to be negative on U.S.-China cooperation, but where U.S. and China could help increase welfare. But
no, I think the case of Brazil is also infrastructure, and I think there is an effort with this government to rebuild the regulatory in which environment in which these projects are done. There is a decision also to do public-private partnership. And I think one area that will probably be also attractive is the oil and gas. There is today, Brazilian Congress is voting a change in the rules to exploration of the pre-salt reserves. And they will eliminate the necessity of Petrobras having a 40% participation in each project, which will make it more attractive to foreign companies.
It's a huge development, actually something that we at the our center had a report on that in July about the potential of Brazil's oil and gas market, and specifically that is really helping to propel it. We have time for one last question. We can maybe take you, I saw your hand, sorry, so I had the fifth row first. Just say your name and organization.
Hello, Benjamin Kreutzfeldt, Johns Hopkins University. I would be very interested to know whether you feel that the SDR position of RMB in Latin America can increase scrutiny or maybe ease transactions, ease the sort of ease looking at transactions between China and Latin America, because they're both very cash-based. I'm encouraged on the one hand, having taught in Colombia, that generally young entrepreneurs don't even know what the RMB is. But there will be possibilities of easing trade, easing transactions, and I wonder whether this will enable greater scrutiny. We focus very much on the high-end big investments, but whether there will be possibilities of easing trade flow, and scrutiny of trade flows between China and Latin America.
Thanks for that question. Miguel, Barbara? Barbara.
I would say, so I think that's what Jason is hoping in his question, cautioning against these investments that may not be as transparent as we would like. I think that trends are going in that direction already. The internationalization of the renminbi won't be a silver bullet for that, but will certainly help increase increase visibility I suspect that this panel is an indication that people are paying more attention to this. And I suspect that that also depends on how much Latin American companies and governments use the renminbi. So I suspect that people like yourself paying attention to this and writing papers and so will probably help increase the knowledge among young entrepreneurs that the renminbi exists, that this may become an option. And as they become able to take advantage of that, potentially that will bring.
Well, Barbara, I think that's a great way to end our discussion, is to give homework to the audience to help us on the follow-up. I'd like to also end, before everyone gets up, I'd like to end by thanking, along with Peter here, we want to thank Maria Fernanda Perez, who's standing in the back, who's been working tirelessly to make this event and this report happen, along with Ivy Yang and our whole team at the Art Center. I'd like to thank Adrian, our founder, for being here today, and also, of course, Jerry, and the whole team, Martin and Jim and everyone over HSBC for their sponsorship of this, not only this report, but this whole initiative. This really allows us to do what I think is oftentimes not done, whether in Washington or beyond, which is looking at the details of the Chinese relationship with markets like Latin America, and realizing that there is no black or white answer. The answer always lies somewhere in the gray. Thank you very much to all our panelists, to Douglas Arner and Andre Suarez, for an excellent report, which if you haven't read, it's right here. Thank you.